Hey guys, hope you guys are having a great morning. Today, I am dropping the hammer. I am finally touching on a subject I have had in the back of my head for months. That is, are we heading towards a future where banks no longer exist? Why are they necessary when their function and advantage have all been made redundant by the rise of tech companies? This episode is going to be very complex in nature, and we are going to tackle this subject from a variety of angles. By the end of it, I believe a great portion of you will not only have a better understanding of the changing nature that finance is undergoing at the moment, but you will also most likely start questioning the role of banking in society. The reason why I am tackling this subject is because the biggest banks in the world have been caught making bets against GameStop and other meme stocks. I have reason to believe that the positions they have, and what they will eventually have to pay back far exceed the capitalization of their entire business, and if they were to go under in the near future, what would this future look like? What does a future without banks look like? I hope you guys enjoy this video as much as I enjoyed making it. I want to thank The Economist magazine for supplanting the idea to make this video. They are the only media outlet that I respect, literally the only one. This video was inspired by a publication they made, and I want to credit them rightly for it. Before we get started, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, who continue to support this channel. Now, let's have some fun and dive right in. How can we imagine a world without banks, when they are so visible? The biggest and most important cities in the world often display buildings with the name of the bank big and bright on the top. Their physical dominance around the world has manifested not only as an absolute needed service for pretty much every citizen in a developed country, but has become symbolic to nature of capitalism, the free market and therefore, the free world. Pretty much from the moment the concept of money was invented, the concept of currency, an institution has always been around that served to protect it. Their services, however, have adapted and grown complex as societies have evolved. They went from simply serving as a storage service of sort for small fees, to providing loans to citizens as well as businesses. They grew to hold fractional reserves, which in a way poses greater risk as this concept is inherently unstable. Technology has brought in a lot of change to the world, and banks have been amongst the entities that have benefited the most from this. Now, almost all transactions are settled digitally. The assets of the world's biggest banks were worth around $128 trillion, a much more imposing figure than the annual global gross product that brought in $84 trillion. And yet, even with all of these impressive figures and historical accomplishments, their global dominance is questioned more and more every day. Technology has finally caught up with banks, now providing easier monetary transactional methods that compete and outperform the standards that banks have grown so complacent in. A key aspect around the central banking system is that it has grown and maintained a special role with governments in that they operate with one another. It is the bridge between the public and private sector. Central banks are now starting to lose business to tech corporations that make easier payment systems, pulling transactions away from the bank. This ease of transaction could very well bring about the end of cash too. General assumption would lead you to think that such disruption by tech giants would be big and shifting, but it is so much more than that. Like I said, banks hold an important position between the private and the public sector. They are indeed the bridge between both economies. There is a deep architecture that has remained the same for centuries, dating back to the 1700s. What lies ahead is full-on overhaul of the deep network by which capitalistic societies have grown. The floor is shifting, and the outcome and indirect consequences of this are unquantifiable in many regards. The question about this change leads one to the most basic fundamental state of being, which is this worth the effort? Is this change worth the risk that it brings? What even is the risk of such theoretical changes? We know that there is a lot of resentment against banks due to their abusive practices often falling in the blind spots of justice. Tech companies are bringing a lot of change, and many of those include balancing out opportunity for many who have been sidelined by banks. Things like credit scores oftentimes limit the financial progression of people. Bank availability in foreign countries do leave billions without even a chance to join developed society. Banks have found comfort in where they are, making good profits off of overcharging their own customers with fees and by trading money. Given this reality, one assumes that any sort of intrusion, Any sort of change by tech companies and new competition ought to fix all the wrongs in the world. But this outlook, though perhaps not entirely wrong, still ignores some of the realities that would be brought upon by such drastic change. Around 90% of money sits in bank deposits, in special reserves held by mostly central banks. This gives a certain amount of credibility and confidence in markets that everything is under control. We know that these institutions are heavily regulated, and that causes a lot of trust for economies, making risk ventures more likely to occur. This is one of the best arguments held by experts arguing that banks are pivotal for Western societies to remain successful, as capitalism is still oftentimes touted as an experiment of sorts since it is a relatively new concept by certain standards. Now, let's quickly talk about the private sector. We know that tech companies are very keen on monopolization and world dominance. Because regulators have not caught up with the speed by which tech companies can easily switch and take over, technology giants have enjoyed and basked in the profits derived from user data information they compiled from their customers. With these huge compilations of data and information they have about their users, what is to stop a hypothetical online finance startup from providing customers quick offers for a loan? They could base a lot of the habits and monetary information they have on individuals to place them on a risk-worthy assessment algorithm that determines the probability of default on payments for such individual in just a matter of minutes, whereas bank loans are a more drawn-out process that require credit scores, which by the way, are totally outdated in the way they are performed and don't really offer a competitive advantage to citizens for the most part. Europe has already embraced this idea of open banking by tech startups. This type of industry is mostly known as fintech. A concern for regulators around the world still lies in that market dominance by fintech will start reaching for more than just basic financial transactions. Investors demand yearly growth for companies, and as such, it won't be long until fintech startups start user data they gather from their customers and users to start using them for other more nefarious purposes. How does one then discern and differentiate a company that is focused on payments from one that stores all their users' data, breaching privacy? The argument slowly shifts to one of citizen rights. On one hand, fintech's reach is bigger than banks. They can provide monetary solutions to countries where banks do not want to open business. With a world rapidly growing more dependent on internet and technology, this advantage will be huge in helping undeveloped countries catch up to certain degrees to the more developed countries. We also see advantages in that fintech could help provide customers better options for transactional fees and loans that are less predatory. Banks still rely on seriously outdated models that offer little incentive to the average folk. Fintech would speed things up, rapidly providing any kind of service to its customers that bank would struggle to keep up with. On the other hand, banks' position with the government cannot be understated. Their very existence helps give legitimacy and confidence to private sectors to test and be more risky, which is absolutely essential for a capitalist society. Banks are also heavily regulated, whereas regulation for fintech is still very insignificant in comparison. This means that if something bad happens, under the eyes of the law, banks have to answer. They hold a lot of responsibility over their customers' funds. When new government policies are made, and drastic changes have to happen, they work hand in hand with central banks to expedite and bring such new changes about. It gives a lot of confidence in the system. However, by the same coin, banks are acting more nefarious than ever, and justice in not being brought upon them. Banks are committing outright criminal acts, and their business models are also slowly starting to seriously become risky even for their customers. On the other side, we have seen how tech giants behave with their customer data. Facebook is notorious for spying on their customers and selling their information. They develop technologies now that access your rear camera to track eye movement, to see where you spend most of your attention on. They use this information to sell you products, growing their control over customers. With such poor regulation by governments, it is hard to even think about trusting the private sector with becoming the institutions that will hold free markets when their sole existence is precisely to rid of competition to stagnate development and force people to only use their products. They buy out competition or any successful application so that it doesn't rival their business. If the owners of such application deny being purchased, companies like Facebook come and copy the exact same app and put a different name on it. Their own CEO has been known to make statements saying he doesn't care what the moral code or ethical guidelines are. That they are nothing but restrictions and opportunity costs for their business, and that they should operate to maximize profits at any and all expenses. With big tech's approach being so aggressive, in conjunction with the poor regulations established as of now, banks' position in our lives starts becoming more trustworthy by comparison. A transition from banking can and will be cheaper and fairer for people, that is undeniable. You will be treated more fairly and with more dignity. On the other hand, the trade-off comes as the cost of privacy as well as uncertainty in the safety of your money. Banks are in charge of creating money. They have very real and important roles to society. They are regulated in many aspects and that provides safety nets for customers. Knowing these two fundamental forces, I am going to throw a rock at you guys, shifting this conversation and making it even more complex. I want to talk about digital money and bring China to the forefront of this conversation for a moment. The American dollar is the most valuable currency in the world. Most global trades in the world are done with the dollar. Oil invoices are performed using the dollar. Most contracts between nations across the world are done using the dollar. The growth in financial markets and trades taking place have used the dollars, cementing the currency's dominance as the de facto option for pretty much everything. Many people have talked about China's growing ambitions to overtake the dollar, as it deprives them from really growing at the rate they want, and having their yuan as the preferred global currency. Though many will say it is impossible for China to take over the dollar, some skeptics like myself remain unconvinced by such confidence. A way that the yuan can quickly start taking over is with tourists. Think about this. Currently, Alipay is a growing platform that merchants all across Southeast Asia use. Tourists are forced to use it in order to purchase products and services when traveling in the area. With time, if you keep asking the hundreds of millions of people that travel to download the app and use it to make transactions, it helps establish the yuan as a necessary currency through the Alipay system. Not too far from this, you will start seeing financial contracts being written into it. This slowly starts to progressively grow, forcing the world to start adopting the yuan as an alternative currency, which by the way, it has already started. Though insignificant in volume, this is already taking place and growing, which is why every politician loves to point at China as an ever-growing threatening force. Alipay is unique in the sense that it is digital money that is start to seriously threat the hegemony of the American dollar. The real reason why China is pushing this digital money through Alipay is because they have to resist the disappearance of public money as cash continues to fall. There is also the concentration of power at the hands of unregulated fintech firms and data techs, which poses a huge threat to not only China, but the rest of the world's economies. People are slowly shifting to using fintech services and tech giants are ever more reliant on their users' data to drive in massive profits. This is theoretical, but this move could be coming from anticipation that America will eventually launch their own digital dollar as well, and China wants to be ahead of the game when that happens. A digital dollar is an absolute nightmare scenario for China, because it will essentially solidify once and for all America's currency as the number one until the very concept of money or currency stops existing, which is a weird way to say never. It would put the dollar out of reach for China and they will be relegated to being number two at best, though I believe they know that holding position number two is not realistic long term and that they will soon start falling. This is why they are so aggressive at the moment. They are in a race against time. China has many problems, and one of them is that their government is untrustworthy. They crack down on businesses, and even business models overnight. Their constant restrictions on business to impose their own will is not smiled upon by anyone. However, the American dollar isn't the only thing on the table. Other countries will soon start developing and releasing their own digital dollars as well, which if America hasn't caught up yet, they will be forced to. It is a simple matter of time. There will be a point in history where you will be paying for groceries at the store with a QR code. And that is where we are at right now. Let me summarize. Banks are trash, and the high fees they collect and loans and products they offer honestly suck. They offer little incentive to anyone, and the only reason they have been successful was because of lack of competition. Fintech offers better alternatives, like lower fees, more accessibility, and quicker processes. However, this comes at a great cost. The network effects will essentially come down to concentrating into one very few giants. Fintech always aims to monopolize everything, and our government isn't doing its job at regulating this problem. Once a couple companies monopolize this market, the benefits of lower fees might go, because they will be able to raise fees and charge more for products because there will be no competition. They devour each other in order to dominate everything. Look at Facebook, look at Microsoft. The pros of this are likely to be very short-lived. This is on top of the fact that banks are the existential bridge between the public and private sector. They work hand in hand with the government, printing money and quickly moving to follow the regulations passed by legislation. Over 90% of the money in the world is sitting at a bank. They are heavily regulated institutions, which provides a lot of safety nets in the events of chaotic turmoil. I think the best way forward is for each to play at each other's weaknesses. Obviously, we need the government to step up to do its job in regulating both banks and giant techs, but both are currently positioned to compete against each other, providing a theoretical better deal for customers. Both should be embraced and forced to improve. Digital currencies are going to come, it's a matter of time, and China is making big moves to sidestep the American dollar by forcing its Alipay onto everyone that visits Southeast Asia. America needs to move fast and decisively to embrace technology, and to acknowledge all the problems and challenges that it will also bring so that we can have a better future with plenty of competition and options that ought to make the free markets flourish. I know some here will question the role of cryptocurrencies. I will say that they also have their role. I think the American government is frankly scared of it and the threat it poses to the dollar. It also shocked them into seeing how quickly people were willing to switch from trading with the dollar to decentralized assets, and forced many in the government to see that if they don't catch up quickly to making radical changes, the American dollar can quickly lose its spot as the number one currency. America has grown complacent sitting on the number one spot, and reality has it that complacency is punished harshly by actors willing to take it out. Crypto should also remain as it is. I remain conflicted into how America should handle it. I don't think it should be regulated, but I also see the challenges it poses as in allowing criminal behavior to go untraceable, like tax evasion or general funding of criminal acts, even terrorist ones. I also do not like the fact that now we are seeing cryptocurrencies growing and being marketed by scammers to rob people off of dollars. Even celebrities are jumping in to cheat their own fans and followers, and this is something that is and should be unacceptable by a government. I need to sit down and read and talk with professionals about this because I have no idea how to protect people from an asset that I believe needs to be kept decentralized. However, that is a topic for another day. I just want to say that cryptocurrency is also going to play a big role going forward and that it isn't going to go away anytime. It is here to stay, like my wife's boyfriend, unfortunately. This video was long overdue. Let me know what you think, tell me if you enjoyed it, and feel free to share it around. I want to thank you all for making it to the end if you are still here. I hope to see you later today for another video later in the day. Thank you so much for supporting these morning videos. The comments and general feedback so far have been great, and I am glad to see that it is having a very positive effect on many of you. I am glad to be of service to you guys, having the opportunity to inform you guys about economic conditions we are living while also providing you recaps and insight into the developments taking place daily in regards to what is going to be the most iconic and monumental economy event in history. Do let me know what you guys think about all the subjects we talked about. I know this video was very complex, and it might take a couple of repeats to truly comprehend everything. I tried my absolute best to discern things down for you guys, and it's up to you to let me know if you got the gist of it or if you got lost along the way. Some of you will ask, what does this have to do with GameStop and other meme stocks? It has nothing to do directly with meme stocks, but it is super important to keep ourselves well informed as to the current events happening. I believe a market crash is looming around the corner, and with so many changes taking place in the economies and the markets, many being driven by pure changes in technology, I want to cover the full scope of the picture, and not limit this channel to only talking about direct recaps and analysis of the existential nature of GameStop and other meme stocks, which is mostly speculative since the private sector on Wall Street have pretty much given themselves free rein. I want to give you a full scope of everything taking place that has direct and indirect consequences on the squeeze. These videos are a great undertaking by me doing tons of research to keep you guys well informed, and so far, I think I am doing a great job, though feel free to correct me if I am wrong. Feedback is imperative, especially on these morning videos, so don't shy away from anything you want to say as long as it is constructive. With that said, please consider dropping a like on the video if you found it helpful or informative in any way. If you want to help this channel, I have provided links which will be in the description for donations and a Patreon if you would like to pledge a monthly donation of any kind. This support really goes a long way for me guys. All money is spent on improving equipment and other parts of the channel so that we can continue to upgrade the quality of Simulate and Trade. It is my source of income as I am doing this full time now. It makes a huge impact and difference, so if you are able and willing, do consider it. I shall see you guys in a couple hours to recap today's performance. It is finally Friday and I get to rest a bit. Let's finish the day strong, so keep on holding and buy some extra tendies if you are able to. Stay strong, stay motivated and to the moon.